Welcome to the Daily Brief, where I'll go over the highlights for the action in the market for Tuesday, November 29th, and then we'll see how things are looking for Wednesday, November 30th. And kind of a slow day, especially on a closing basis. We shot up at the open and then really went down, but we ended up closing down just slightly from Monday's close. But the market seems to be anticipating the speech that will be happening on Wednesday that Chairperson Powell will be giving, and that'll be at about 1:30 p.m. Eastern time. So ahead of that, the market is really not sure what to do because he's rained on the parade before. Markets were heading up, and then he comes out and says something, and the markets turn and tank. And so understandably, you can see where the market is a little gun shy here. Is he going to come out just talking about how terrible inflation is and how we need to get ahead of that? And that's our number one concern. Or is he going to lessen some of those comments and be more friendly? Or another way of putting this is pivot to a more market friendly type of an environment. In the meantime, we're still hanging in there looking more positive, but we've dropped into a trendless situation. So let's go back and talk about what happened. Right at the open, we had a flat open. The futures were a little bit positive, so there was a positive flare, but by the time we opened, we were flat, but then went higher. And we actually got up to the daily pivot at 39.77. As the day went on, we saw some selling really hit the market where we went all the way from the daily pivot down to the unchanged level and then went negative. And we found support finally when we hit S1 at 39.42. Then we rebounded slightly and came back up to the unchanged level again, which now was acting as resistance. And then prices fell back a little bit and then improved slightly going into the close. So by the time everything was said and done, we were down 0.16%, not a big move at all. Just like Monday's session saw a real muted session. Tuesday was pretty much the same way. And we're still dealing with below average volume, and it decreased from Monday's session. Our technicals, as I said, and I don't have a lot of charts because nothing has really changed all that much, but we're still leaning more towards the positive side as far as our charts are concerned. But every day that we have this downward movement, yes, we're working off some of the short-term overbought condition, but we're starting to see some weakness developing into our charts. The oscillators are still positive, but showing weakness. Some of our other indicators that we look at, they're turning down slightly, but they're still positive overall. Inflation and interest rates, yep, that's where it's all at right now. And then you can combine that with the other statement here about Fed speak. That's really what the market's going to be looking at today, unless something other outside of it that's astronomical hits the markets. But that seems to be the focal point right now. Here is the intraday chart where we had pretty much a flat open. We went up to the daily pivot. Then we saw some selling come in that took us all the way down to S1. We did find some support just a little bit below S1, went all the way back up to the unchanged level, fell back, and then showed a little bit of improvement going into the close. So it was kind of another roller coaster type day. So what are some comments that we can make? The hope was at the beginning, they saw a real improvement in Hong Kong with the Hang Seng index. It was up 5.2%. And that was up on the hope that China will try to get away from the zero COVID policy. And also with them implementing some of these stimulus measures in China, that will help improve the economy. But that didn't really have a big impact on the U.S. markets. And then, as I keep saying, Fed Chair Powell will be giving a speech on Wednesday at 1:30 p.m. Eastern time. The markets will be really watching that and trying to gauge what he's saying, how he says it. Is it friendly? Is it unfriendly? Is it more hawkish or dovish? And believe me, the market's going to react to whatever they interpret he says. And there's also some speculation that OPEC could soon announce a cut in production. That means that oil prices are now going back up. When there's more oil out on the market, prices tend to fall. When there's less oil out on the market, prices tend to go up. So that has helped give a little bit of support to oil. Interest rates did rise during the session, so that was also an overhead resistance or headwind to the market reaction. On a short-term basis, we still have some of our stochastic studies that are extreme positive. These slight down days that we're having, even though these are touchy indicators, they're not really enough to really change them all that much. And then in the intermediate term, we still have the BPI that is extreme positive. And I'm still taking that as positive. We didn't see a big movement in that chart, even though we had a roller coaster day. And so the fact that that is hanging in there for right now shows that there's still some strength that's remaining in the market. We still have our yield curves that are inverted. That has not changed. And sentiment, it ticked down a little bit with the down day, but we're still in the positive area. We had a number of economic reports that came out. We had the FHFA housing index that was up 0.1%. The last time we got the report, it was down 0.7%. So this did show some improvement. We also had the S&P Case-Shiller Home Price Index. And as housing prices continue to go up, well, it's reflected here that it came in at 10.4%, a little bit less than what they expected at 10.7%. The last time we got the report, it was at 13.1%. And consumer confidence came in at 100.2, just a little bit better than the 100 that they expected. The last time we got the report, it was at 102.2, so it's actually declined a little bit since last time. Our trend is positive, but we've dropped below 20 now, so we're now in a trendless environment. I'm keeping our bias at negative because we've had 2 down days, even though they haven't been really significant. And I'm kind of leerily keeping momentum at mixed. Even with the down days, we still have a positive backdrop. Now, that could all go away if the market does not like what Chairperson Powell says in his speech, and there's a negative reaction to it. That'll throw the positive side of this momentum right out the window. And that's why I'm keeping it at mixed, because if they like what he says, we could see some real advancing. If they don't like what he says, we could see some real declining. And then just to show you, again, this chart has not been updated now for a little over a week, but the green line here, that is just showing what happened from 2006 through 2008 and how we've been tracking that fairly closely in 2021. That's when we were going up and then declining in 2022. If we continue to follow what already happened, we could see some weakness going into the end of the year. This is the VIX also, which shows that if it's going up, that could also mean that prices do decline. Here's our trend showing how the ADX is now dropped below 20. It's at 19.57, but the green line is on top, even though it's declining. So we still default to a trendless environment, but with a positive flare or positive bias to it. The equity put call ratio, even though it spiked up and has come down, we're still at a really high level right now. So we're just kind of waiting to see if prices do go up, will the equity put call ratio continue to fall? And after this spike, this sometimes can give support to the S&P 500. But we've had this happen many times throughout 2022, only to see it stall out pretty quickly. Here's our daily chart showing that we kind of opened just a little bit lower than the open here. But this is not necessarily that healthy looking right now, where we came up to this resistance level and we have 2 red down bars right here. Can we recover from that? Can we go back up to this pivot and possibly break through this resistance level? We're still in between the 200-day moving average, that's the red line on top, and the 50-period moving average, which is on bottom. And down here where we show volume, where it's below average and it did decrease from Monday's session. Here's our moving average tree showing that we're kind of in between. We're below the exponential 200-day moving average, but still above the 100 moving averages. And this is helping things a little bit. The longer that we stay above these moving averages that are below current prices, that will help them to turn up. But what we need to see if we're really going to get some strength is we need to come back up to the 200-day exponential and then get through the 200-day simple moving average. New highs, new lows, seeing some weakness develop there now. So our 5-day is starting to turn down, and we're flat to a little bit lower with our 10-day differential. Also, with the summation index based on price, the McClellan oscillator is still positive. So we're still going up there. But we have started to turn down now based on volume, and sometimes this can be a leading indicator. Our fib levels were kind of right in between, where we broke down through the 61.8% retracement level. We're still above the 50% retracement level, but we're in kind of no man's land right now. And we'll see. Will the speech that'll be given today, is that going to bring the volume in? Is that going to bring conviction in one way or the other to see if we can break back to the upside, or are we going to break to the downside? Longer term, how we came right up to this fib level, went a little bit above it, and then have been retracing ever so slightly since that time. So what's our outlook then for Wednesday? The technicals, they're still positive, but they're weakening with these down days. We're still a little bit short-term overbought with our stochastics chart. And then the speech that will be given at 1:30 p.m. Eastern time. We have the weekly mortgage index will be coming out, the ADP employment change. That's usually released a few days before the employment situation report. So we'll see how that's looking. The international goods trade deficit will be coming out. We have the advanced retail and wholesale inventories. Get the third quarter GDP second estimate. Now the market really fixated on the first, the advanced version of that, but we'll still be watching this to see, is there a big change from the previous report, either positive or negative? The Chicago PMI, which sometimes can be influential, and pending home sales. So we've got a pretty long list, not really big in and of themselves as far as the economic reports. We'll kind of be taking them as a whole. And then all the listed geopolitical events. And kind of at the forefront of the news right now are the protests that are happening in China. And it's supposed to be due to the COVID restrictions, but it seems like a lot more is going on there than just being angry over the restrictions. So, and I understand that right now the current administration, they're just going to stay silent about that situation. So not really sure where the US is going to stand one way or the other. This is really affecting some companies like Apple because they do a lot of production in China, and this is really having an impact on them. And that was kind of the reason for the downturn that we saw in today's session, was just the fears coming out of China and influencing Apple. Apple goes down, takes the market with it. We also have, of course, the Fed speak coming out with the speech, and then this looming railroad strike. We'll see. They're probably still talking back and forth, but from what I can find, nothing has really been settled as far as that is concerned. And that's more of a supply chain issue and an economic issue and a consumer issue as well, because if we can't move things around from one place to the other with using the trains, well, there's also talk of possibly a diesel shortage. That's mostly the trucks that we use as well. And this could really have an impact for folks trying to get the things that they need to get to live. So our scenarios, we're not going with the down scenario, except we're still a little bit short-term overbought. I'm taking off the up or positive because the ADX has dropped. And our scenarios, they're doing okay. The sector rotation is not looking very good right now, but that could change if we get some real positive buying coming into the market. And our setups, they're holding up for right now, but they are showing some weakness currently. We're right in between a couple of moving averages. We did lose some pivots and fib retracements. So now we're going to have to see if we go up, will they be resistance? If we go down, will they be support? So we're going with the sideways pattern for right now because the ADX is below 20, but the green line's on top. So we default to the positive. So our conclusion, S&P is positive, but showing some weakness and still a little bit overbought in the short term. Intermediate term, it's positive, but as we continue to tick lower, we're still okay, but our indicators are showing some weakness. Long term, we continue to be negative. So have a wonderful Wednesday. Let's see how things unfold as the day unfolds, and I'll talk to you in the next video.